All right, well, let's get into the markets. Wall Street ending higher overnight, bolstered by reports that a trade deal is close. What does that mean? Of course, more broadly, Tony Sycamore from IG joining me with the technicals. So when we look at the Nasdaq, an impressive 0.6% gain. What are the technicals showing you?
Technicals are showing us that the Nasdaq and the other US stock indices are continuing to climb a wall of worry, and there is concerns that obviously some of the data last night, the soft data, continues to fall away, but we know that this has happened in the past. At the end of 2022, we saw the soft data fall away, but the hard data didn't actually confirm. So at this point of time, we're still waiting for that confirmation around the hard data, and that's probably not going to be until late June, possibly around July. So in the meantime, the softening rhetoric around tariffs and the optimism around some trade deals have sent the Nasdaq higher, and where I see it beginning to run out of steam is up around that 200-day moving average, that orange line there around 20,200. I just feel that the upside is limited until we see actual evidence in the hard data of, i.e. the economy continuing to soften in line with what we're seeing in the soft data, or the tariffs are rolled back, and in the meantime, the Nasdaq can push above that level. So for me right here, the upside is limited, can potentially grind another 1% or 2% higher, but I feel like we're probably setting up for a period of consolidation or range trading in that Nasdaq.
What about our market? Because we broke through 8,000 again on the ASX200 yesterday, getting close to 8,100 points today. So it's almost like Liberation Day didn't happen. We're back to those levels before that.
That's right. And a similar story for our market. The fact we touched 8,100 this morning, it's been a very good run higher. I think you're starting to see people scramble now. We're almost 1,000 points above that 71.69 low. So if you were waiting for some signs of stability to return to the markets and you missed that sell-off, you're probably starting to think I've got to put some money into the market. Of course, we've also got month end as well, and that's generally a strong time for markets, as are the first couple of days of the new month. But likewise, we have the 200-day moving average sitting not too far from here, around 81.50-ish. And my base case, as it is with the Nasdaq, is the upside is somewhat limited from here. We need to see either more evidence that the hard data is going to fall away, or those tariffs continue to be wound back. So for that reason, I am looking for some consolidation in the ASX 200, either side of that 200-day moving average. I could see it pushing up towards 8,200, just above there. But also, I wouldn't be surprised to see some consolidation and a pull back towards 7,700. So a little bit of wait and see now. At this point of time, I feel like it's had a good run, but we're probably going to get towards that end of that as we go into a holding period.
So month end also potentially impacting the dollar, but we've got CPI today as well.
Yes.
Where are we going to see the dollar trend?
Well, the US dollar's had a shocker this month, so it's not unusual to see month end rebalancing. You buy the losers, you sell the winners. The winners this month have been the euro, they've been the Japanese yen. For the Aussie dollar, we're up around 2%, a bit over that. But of course, you've got the CPI data coming out shortly, and I think that probably sees the trimmed mean, which is the one that the RBA is looking at, fall back within that target band of 2 to 3% for the first time in quite a few years. So I think that's a good sign and probably gives the RBA the green light to cut rates in just over 3 weeks' time. But for the Aussie dollar, what we need to see now is it get above that 200-day moving average. It had a look last night, got up to around 64.50. 200-day moving average is a little bit higher, around 64, 65-ish. But at this point in time, you can see there's some selling just ahead of that resistance. And I think I mentioned last week, if that 200-day moving average is breached, then you'll start to see some more of these longer-term momentum, currency momentum and model type accounts start to cover shorts and potentially go long in the Aussie dollar. You'll also see some of these asset allocators who make the decisions based on the 200-day moving average probably also start to look for a sustained move above there, and that would get them involved in the market. But at this point in time, it's just below there. It could go either way, but know that if it can get above there, then there's probably more upside towards 68 cents.
So you talk about the dollar, the US dollar having a bad month. What about oil? It's had a shocker April. Tell us where we're at.
Yeah, and for good reason. I mean, you've got the concerns around tariffs, slowing growth. You've got OPEC looking to add to supply. Everything's going wrong for crude oil, down around 15.5% this month. It's been an absolute shocker. And I think the risks are that while it holds below that resistance, $65 to $67, the risks are we see a retest of that $55 low. I just cannot see it playing out any other way unless something untold at this point of time or unforeseen comes out of the blue. But for me, a retest of those lows is looking likely while it holds below that medium-term resistance area.
Right, and what about Bitcoin? It's had a good month. Where is it tracking at the moment?
Yeah, solid month for Bitcoin. Consolidating at this point of time, the gains which we saw this month, I think it's probably just coiling, waiting to rebuild energy, providing it holds above the 200-day moving average and also above those lows we saw there in the mid-70s. I like it. I think it looks great technically, and it can retest that $110,000 high, potentially move up towards 120 to 125K. So the stage is set for me. We need the risk, I guess, the volatility to continue to ease like we have seen in risk assets and markets. But so far, so good for Bitcoin. It was an absolute sea of tranquility there during that really volatile period we saw after Liberation Day. I like that, and that encourages me to think it can continue high.